All right. So we are right at about the bottom of the hour, however you count it. So today we are talking about a really good subject here. Unfortunately, it is something that for the vast majority of us is going to go away. And so I want to talk about what it is, what it was, what's changing. If you want to take advantage of it and use it, what do you need to do? We're going to go over some case studies. I'm going to give you a little bit of inside information. I've personally done multiple of these things and personally think it's sad that it's going away. But let's go ahead and dig in. Feel free to put your questions in the chat at any time. If it's hitting along with my groove, I will answer it right away. If it will be answered coming up, then I'll let you know that. And on a couple of them, I'll hit them at the end if that works. If you are watching this on demand, throw your questions in anytime. And generally, I get those and respond to you within a day or so with a personal response. So you still get great answers to your questions. So hopefully you are watching this live or not long after because this is one of our timely live webinars that is important to get to acting on if you want to do anything about it. So first and foremost, always disclosures on these. I'm making these every week. It takes a lot of work. I got a lot of other things to do. I really work to try, and so does our company and everyone that helps me to make sure that they're accurate and reliable, but we make no warranties. You still need to do your own due diligence. If you're going to implement something, make sure you tap your professionals, do some extra due diligence just in case we made a typo or got some wrong information from another source. And you can check out all of our disclosure emails on our website or materials. So our agenda, always like to give you a bottom line up front. We're going to talk about residential and commercial incentives, what's changing, what you can do, some case studies, some planning and next steps, and of course, a little bit about us, how we help our clients as well. So first of all, on the bottom line up front, many, if not most, of the energy tax credits are probably disappearing after 2025. So that big, beautiful tax legislation that Trump and the Republicans talking about going through is pretty much going to wipe out a lot of this stuff. Now, of course, they could still change it. They could not pass it. But the way that things are going, I would give it a pretty good chance of what I'm going to talk about in here is going to get implemented. Okay. So really what we come down to from that is the deadline to complete any projects or purchase an EV or whatever is 12/31/25. You got to be done. Okay. Don't do it. You're going to miss it. They're grandfathering it in for this year. But if you don't get it, you're not going to get it unless we wait until the future when another administration in Congress may do something again. So you could lose out on thousands of dollars doing something that you wanted to do anyways, or that was good for you or your family or your business by procrastinating. We thought we were going to have 7 more years at least. And now it's like, boom, you got a fraction of a year. Okay. So let's look at that. So the reason, political shift, we already mentioned it with the kind of the sweep that happened with the elections, new administration, new Congress, and with really a goal to unwind the Inflation Reduction Act, except in a couple places where there's probably contributors or lobbyists that have invested a lot that have a seat at the table. They're going to keep a few of them, but that's not really going to affect any regular Americans for the stuff that you want to do, unless you're super rich and out there lobbying. So why are they doing it? There could be a lot of reasons. I really think that this one, so the loyalty to the fossil fuel industry, belief in energy dominance of oil and gas, and trying to save money so that they can pass the tax breaks. Because there's half the conservatives, are just like, oh my God, we're spending $5 trillion more to give tax cuts. It's too much. It's too much. We got to find some other money in other places. So, trying to cut Medicare, Medicaid, and cutting the Inflation Reduction Act. So by doing these things that we're going to talk about, the estimated savings to the government's about $500 billion. So again, kind of a drop in the bucket to $5 trillion more in tax increases. But again, they're trying to get people on board to vote for that. And this is a big piece of some money that they can grab back. Um, a lot of people say opposition to government intervention and they want free markets. To me, that's kind of a loose argument because, they're subsidizing and doing things in other industries while kind of throwing in the towel in this. And then, there are some people that are like this, just anti-green. They just don't like the idea of the government, pushing things through that are a little bit more green or progressive. And then culture war type issue. I mean, clean energy and protecting the environment has pretty much become symbolic of like elite liberal coastal academic type values, and getting rid of all this stuff is a way to just smack back at all of those people, unfortunately. So let's keep going forward to get into what we're talking about, though. So the first one, and this one affects lots of people if you know what you're doing, and actually qualify for these things. Most of these improvements that you do to your house that have some kind of energy efficiency, you should be getting some kind of credit for. Okay, so if you own the house, it's on your primary residence, then for the things we'll talk about that you can use, you can get a 30% tax credit up to $3,200 per year. So it's not a ton of money, but still, if you were going to do something you were going to do anyways, and you get to buy something, or you were going to anyways, that was going to at least meet the minimum energy efficiency, the government's going to subsidize you. That's a pretty cool, tax credit. So, if you were going to spend almost $10,000 and you get 3,000 of it back, that's great, right? What we're really talking about are home improvements like re-insulating above a certain amount, HVAC like heating and cooling, heat pumps, energy efficient windows and doors, things that'll just make your home more energy efficient. It was supposed to go through to 2032, but it's probably going to be repealed by the end of this year. Okay, this one's called 25C. Is what the energy efficient home improvement credit part of the tax bill was. And we can dig into it, like what qualifies for it. So if we were to talk about, the outside of your house, you could do exterior doors, but you can only do 2 doors basically, up to $250 per door, 500 max. So if you think about that, say 250 divided by 0.3, it's like a $800 and some door. Okay, is like the max that you'll get a credit for. You can buy one more expensive and just get 250, right? And then if you got your front door, back door, then you got your $500 of that one that they gave back to you. And then exterior windows and skylights, $600 total. And then insulation. So whether you're spray foaming in stuff or redoing upstairs, getting a higher R value, etc., then you, again, 30%. And when you add all this stuff together, just can't go over, we'll get it on the next slide, like $1,200, okay, for that. Now, where you can get a little bit more is on like heating and cooling systems, okay? And so they got to meet the efficiency standards, okay, set by the CEE. And we're talking about air conditioners, we're talking about heat pumps, we're talking about even natural gas, propane, or oil furnaces, as long as they're hitting that energy efficiency that's required, and hot water boilers. Okay, now heat pumps especially can go up to $2,000, and those are really energy efficient, even for heating your home above a certain point. Probably up to about 10 degrees Fahrenheit or so. They work really well. I've had heat pumps for a long time. Water heaters, so heat pump water heaters and high efficiency gas, propane, or oil heaters. Now, if you have to upgrade your electrical because of these things, then that can be included as well. There's a couple rules for it, so it needs to be related to what you're doing. And then you got to be, 200 amps or better. If you have to upgrade and you're putting in these things, I can't imagine you're under 200 amps. You might have been at 100 and now you need 200, right? So a lot of old houses that didn't use a lot of electricity and were on natural gas might be on a 100 amp service. And it's like, oh, with this and this, they're each going to require, 140 amps and 150 amps. Well, that's a whole extra 90 load on there. You might need to upgrade your service. And you can do home energy audit. So if you don't know that you necessarily need these things, it's got to be a professional one. You can't like DIY it and then just try to claim $150 credit. But they can help you figure out what you need to do. So let's see. It says, is there a PowerPoint? Am my PowerPoint not playing? Mm-hmm. Uh-oh. My apologies, everyone. Let's go back just so you can see my slides. Let's see here. Thought I had that going from the get-go. So, all right, my disclosure you saw. I told you about the agenda. There's the bottom line up front, and then the political shift, the reasons why. We'll also include this as a file you can download. So if you want to go back and look at it yourself later, you can. Again, we make no warranties on the information here, but I did spend a lot of time on it. This is talking about the 25C, and now this is where I was talking about like all the doors and windows and HVAC, water heaters, energy audit, etc. So thanks for pointing that out. That will make it better for everyone. So what doesn't count? So roof replacements or repairs, new constructions or additions. So you can't write off your addition saying, hey, this side of the, this new addition is really energy efficient. You got to improve on existing homes. No portable or window AC units. It's got to be like a central type system or a whole system, like a mini split or what so. Wood burning stoves or fireplaces, appliances. They kind of used to in the past, and then there are some Energy Star rebates, but not now on these. You cannot do DIY energy audits, like I said. You can't just write off labor costs saying you're making the place more energy efficient. There's got to be like a whole plan and the things that you buy and the labor all together. And then smart thermostats. They used to be covered, but not anymore. So a summary, as I had mentioned, it's a 3,200 max. 1,200 can come from like the windows and the doors and the things around your house. 2,000 for your heat pump water heaters, biomass stoves, etc. They got to be made to your primary residence, not to a rental or your vacation home or what so. So this is just for your primary residence. And you must keep receipts, document the certification from the manufacturer. If you have a contractor that's good doing this stuff for you and these things qualify for that, then hopefully they're documented in the plans and all the stuff that they give you. So then if you get audited, you'll be good to go. No problem that you took that credit. And then the equipment has to be placed into service that year. You can't just pay for it at the beginning of December and then they install it in February next year. So, if this law gets repealed, then boom, you just lost it. You're not getting anything. It's got to be installed and working by the end of the year. Okay. Now, this is the one I think most people think of with this, and that is the residential incentives for solar and batteries and wind as well too. And this one is a 30% credit for solar, wind, batteries, geothermal, unlimited. Okay. Now again, you got to spend all that money to get 30% of it, but is a great benefit to people that do want to go alternative, green, clean, be self-sufficient, possibly off the grid, help with defense and stuff by making a decentralized energy grid, etc. A great program. But it was supposed to go to 2032. It will probably end at the end of this year. So let's look at what's included. So you can get solar electric panels, so solar panels, solar water heating systems. You can't use it for pools or hot tubs or what so, because a lot of people do buy these just for that, and it can't. Okay, half the energy used to heat the water has to come from the sun, and it must be certified. Okay, if you're going to do the solar water heating, but for most people, it's going to be solar panels, right? Solar photovoltaic means that the photons from the sun make electricity by striking them. Battery storage systems, They have to be a certain size, over 3 kilowatt hours, so a decent size. You're not just going to put a couple marine batteries in there and try to take a credit for it. It's got to be big enough to meet the definition here. It applies to upgrading or new installs, and you can charge them from the grid. So from your utility, your regular service that comes in, from solar, or a combination. Most people will be a combination. If you live out in the middle of nowhere and you're not grid tied, it'd straight up just be solar. If you wanted to buy batteries because you wanted it for backup, then it would only be tied to the grid. Okay. But most people with solar and are tied to the grid at different times, depending on your rules, because you can set rules for it, it'll get charged or withdrawn in different permutations. Wind turbines, so that's up to 100 kilowatt of capacity. That's 100 kilowatts is huge. If you have 100 kilowatt solar, I mean, it is a big solar installation. So if we were to look up, 100 kilowatt wind turbine and look at them, let's find a good picture. Look, I mean, that thing is probably as big as that truck, or that big van. It's like a delivery van plus that. I mean, this thing can generate a decent amount of power. I saw another one at one point that was like as big as like a 150 horsepower tractor. Oh, there it is. When you see that up there. So these things are pretty significant. So if you're talking about this for residential, that's a lot of energy. Okay. Let's go back. And it has to be used for residential, not utility scale. Geothermal heat pumps. So this is where you kind of run the tubes down through the ground and, below about 4 or 5 feet or so, it's always about 50 degrees down there. And so you can get things up or down in temperature depending on what you're doing very energy efficiently without having to use a lot of heat. And then you only have to heat or cool below or above what the natural geothermal could do. So those are really cool systems. They just tend to be very expensive. Fuel cell systems also qualify. Obviously, there are rules for those as well. They tend to be really expensive. They're kind of cool because they'll use like natural gas, and then through their process without combustion, they'll convert it into energy and heat and CO2 and water. And it makes a very reliable energy source off of something that, just comes to you automatically, very consistently. Of course, natural gas production could get interrupted as well too, but it doesn't happen near as often as the electrical going out, right, in storms and what so. So what doesn't qualify? You can't put it on your rental property and get the credit for it. So you can on your personal residence and your secondary, but no rentals. Off-grid, that's not placed in service. So if you just put some small system out in some cabin, but you don't really use it, you only turn it on when you go out there, then it's questionable whether it counts or not. So if you turn it on and it's in service, you just leave it on, claim the credit, etc. But if you're just you install it, don't really turn it on until you're going to go out there next year, you could be in trouble. Roofing, unless it's integral to the solar, and so you really have to document that. I see a lot of gray area on this. Well, it's old and we can't do it unless we replace it. Well, no, it probably needed replaced anyways. But if it is something that has to be done, that's integral to the system, you wouldn't have had to replace your roof anyways. Or maybe it's solar shingles, like how Tesla makes, or what so. Then for sure, energy efficient appliances or upgrades. As we had talked about before, those go under the 25C, not the 25D. Littler batteries aren't going to qualify. Hybrid heaters, wind turbines more than 100 kilowatt. We'll talk about the commercial ways that you can do this, but they're a lot harder. They're a lot harder to do. Portable solar panels, so you can't just prop up a bunch of the ones that you can buy that fold up and say you're going to use it for your house and then try to claim the credit. That's not going to work. They have to be permanently installed. DIY installs without documentation. You absolutely can DIY stuff. We're going to talk about that, but you're going to need to have a plan. You need to document everything. You got to have the certifications from the equipment and from the manufacturers. and have almost like a file. So if they audit you, you're like, listen, this is all this is. This was the plan for this. Here's each component and how each one qualifies, et cetera. They're going to be like, okay, good job, hopefully. All right, so let's look at a summary for this. And again, as I have mentioned, feel free to throw your chats in there anytime. I'll try to hit them as we go. So 25D summary for the solar, wind, battery, geothermal, and the fuel cells. 30% of the total cost. You can add everything together there that actually goes with it. And then the credit was supposed to phase down from 33 to 34 and expire after that. But as I mentioned earlier, it's probably going to be gone at the end of this year. There are no annual or lifetime dollar cap. So that's terrific. If you have a bigger house or residence or use a lot more electricity, say you have 3 electric cars and everything in your house runs off of electricity, your heat pump, even your heater, everything is electrical. You could use a good bit more. It has to be installed on a U.S. residence that you own. You can do primary or secondary, but again, no rentals. It has to be placed in service. So we're not talking about buying everything, sticking it in your basement, and then you're going to install it next year. You want to claim it this year, you got to buy it, install it, and you have to flip it on, and the entire thing has to work. Okay? If you don't do that, it's not for this year. Okay? It can be new construction, but again, it's going to be installed and operational, and you only get to obviously claim the part that is the renewable thing, not any more of the construction than that. Okay, so save your certification statements, all the record keeping, itemized invoices. You got to pay for it yourself. You can't go through some program where they pay for it and then you lease it or whatever. They're going to get the tax credit, not you. Okay. Now, if you want to finance it, like say you take out a HELOC to pay for it, that's fine. Nobody cares how you finance it, but you have to pay for it. So you got the loan, you're paying the loan back, you're paying the interest. Okay. So it has to be you. All right, moving on to the EVs. Oh, looks like we have a question. Let me see here. Is there any coordination needed with my tax preparer ahead of time, or can I just hand them the receipts in April? So, it depends on your tax preparer, right? So I would say most tax preparers, they're not going to get into your stuff and say, do you have this? Do you support this, and this, and that? You're going to be like, I installed solar. I have this. It costs this much. And they'll be like, do you have all the documentation in case you get audited? You're going to say yes. And they're just going to claim, right? What your credit is for what you spent. Now, if you have a really hands-on one that is a lot more white glove, like some people might have with businesses and whatever the case, then they might want to dig into it to make sure that you're safe. Okay, I have another question. Haley, yes, this is all about United States tax incentives for solar and wind and geothermal and EVs, etc. More so, not that we don't like talking about the technology itself and how you can use it. The case studies at the end still might be useful to you. You would just have to convert them into your costs and stuff for where you live, etc. And then, without tax credits, or if you have different ones or tax incentives, you would have to kind of change those numbers. Okay. All right. So current EV tax credits. So for new electric vehicles, up to $7,500, used $4,000. But there's eligibility requirements in terms of how much you can make, how much the car costs, how much of it was made here, where did the battery materials come from, etc. Or you could lose some of those credits. Again, the proposed legislative changes would get rid of this after 2025. I'm interested to see, since Elon is so tight with the administration, to see if he can get this turned around. But on the flip side, he is, a little bit different cat. He may want the credits to go away because he thinks Tesla can do awesome without tax credits, while it'll crush the other manufacturers. And so maybe he is for the credits going away, just so he can dominate a little bit in the EV market. So I guess we'll see. But I would expect, if you're planning, that they go away after this year. So this one's called 30D. That's the part of it. It's new clean vehicle credit. So you can get up to $7,500. It's split into two components. Is the battery component credit, which is $3,750. So more than 50% of the battery components must be manufactured and assembled in North America. So that's Canada, the United States, and Mexico. And then the critical mineral credit, which is the other half of it, more than 40% of it. And each year that goes up, again, it's going to be a moot point if they get rid of it, must be extracted or processed in the United States. And so you got to meet both of those conditions to get the full $7,500. So vehicle eligibility, final assembly must occur in North America. It has to be new. It can't cost more than $55,000 for a car or $80,000 for an SUV, truck, van. And then it must be on the IRS approved list. So you're able to go actually look up the car on here. And that's a good thing to do. So if you just think you're going to get a credit and then you buy the car and you get to the end of the tax year and it doesn't qualify, right? Go look it up. I think you can even get the VIN from the manufacturer and put the specific VIN in there, and they'll tell you, the government website will tell you if it's good or not, or maybe it's only getting a partial credit because they didn't source all the materials from where they're allowed to, U.S. or U.S. FTA partner. Okay. Your eligibility requirements. So first of all, if you make too much money, you don't qualify for this. Okay. So if you're single and you make more than $150,000, then tough luck, right? You're not going to use this credit. Now, you can use current or prior year. So if you made more this year but less last year, then you could still be in luck. If you're married, then it's double. Okay, so $300,000. Okay, how do you get it? You can transfer it to the dealer, and they can just straight up cut it off of the purchase price, or then you can claim it on your tax return on Form 8936. This is how I've always done it. I've bought multiple EVs, and generally you're going to file it on your taxes. This credit is non-refundable, which means if you're not paying that much tax, you can't get money back. They're not going to give you if you owe $4,000 and you try to claim 75, you're not getting $3,500. You're only going to be able to claim like the 4,000 in the tax that you owe. Now you could carry it forward, but it's a non-refundable credit, unlike like child tax credits and stuff like that. Lease vehicles are not eligible, but dealers can claim a credit since they own it. And if they were nice or it's a competitive market, they could pass savings on to the people that are leasing. And you got to use it for primary use in the United States. So 25E is the used clean vehicle. So you can see the income limits are a lot lower on this, pretty much half. Okay. And the car can't be more than $25,000, right? So yeah, I think that's a little bit at least of the pressure of the depreciation of things to get down under this. And it makes EVs really affordable. So it's got to be at least 2 years old, sold by a dealer. It's not, for sale by owner type stuff. Only one resale. It's the first resale. You can't keep getting it on the same car multiple times. If the battery's got to be over a certain capacity to qualify, and you can get up to 4,000 or 30%, whichever's less. Okay, this is a great deal for people. I mean, there's a lot of good cars in the market right now that would qualify for this if you can qualify for it. You get some of those Model 3s or Ys that Hertz or whoever kicked off, and you can get it for under $25K and then get the $4K tax credit. I mean, that is probably one of the best deals in the world for the last decade on value you're going to get out of an automobile. So again, you can only use one credit per vehicle lifetime, and the vehicle has to be for personal use. And you can transfer it to the dealer. So if they just want to cut the price and then they get the credit, they absolutely can. Okay. Commercial. So commercial is so much more complicated. Okay. So I'm going to explain it to you a little bit, but I'm not going to dig into it too complicated wise because it's not going to affect most of you, but it's still worth mentioning that it exists. So there's an investment tax credit or ITC, a production tax credit or PTC. And these are kind of more for when you think about when we were talking about the residential of installing these same type of things. Okay. And the investment tax credit will give it back to you up to 50%. But when you use these, there's a thing that you have to follow. Oh, what was it called? It was David Bacon, something like that. Legislation for apprenticeship and labor wages. And when you put these things into there, I mean, when you look at like what the average going rate is, even sometimes in the unions for some of these trades, it could be like over 2 times the cost. So there are circumstances when if you have to pay that wage and fringe extra according to that legislation, that the tax credit doesn't even get you the extra you had to pay out to all these people on there. And so you really have to do the math. And that's why I said it gets complicated and it can go up to 50%. But if you're not going to hit some of those things to get those bonuses, you may only qualify for like 6 to 10% or so. And so then the tax credits become very much smaller. The production tax credit is based more of what you produce, like a per unit, per kilowatt hour, etc. And so you really have to just you can claim one or the other, not both of them, just see which is going to be more preferential. So if you get into a situation where you're trying to do something commercial, you need to get an expert on this to help you do the math on it. I mean, when you get into advanced manufacturing, into wafers or panels and inverters and per unit, I mean, this can be huge tax dollars here. Okay. And so again, you really need to sink some time into this business planning, tax planning, probably legal help, etc. Because at this point, we're talking about millions, if you're big, billions, and so this is not for us regular mortals here, but it does exist. It's called a 45X. And so these are supposed to phase out 2032. The proposed legislation doesn't just end them in 2025. Lets them go to 2029. Okay, so they're still phasing them earlier out, but they're going to let it go longer. More than likely, like I said, for all the lobbying, if you're an insider and say, hey, we already started planning on these, we're spending on this, like you're just screwing us over. Can you help us out? And so they're saying, all right, yeah, we will let you go to 2029, unlike everyone else. So again, this is all proposed legislation. We don't know until it actually happens. I'm going to give you a quick overview of the 45W, which is the commercial clean vehicle credit. I've used this one personally as well. And it is actually more flexible than the personal EV, and it's relatively easy to understand. This one's not as complicated as the other commercials. So again, if you're buying a regular vehicle, so under 14,000 pounds, which if you're over that, you're really buying some heavier equipment, trucks and, machines basically that are large. But again, for the regular vehicles, same credit, $7,500. You're going to buy big stuff like a big electric dump truck or electric 18-wheeler, whatever the case, that qualifies. You can go up to $40,000 in credit. So any business of any size can claim it. Tax exempt entities can as well too. And the credit's going to be the lesser of 15% of the vehicle's costs, 30% if it's straight up 100% electric. Okay, so if it's a hybrid or some of the fuel cell type stuff or whatever, then you're going to be at 15. If it's 100% straight up electric with no gas or diesel, then it's 30%. And so, like we said, that there's caps there. You've got to use it in your trade or business. It's got to be used. It's got to qualify as some type of clean vehicle. There doesn't matter where it was assembled or sourced. So it doesn't matter about like those battery requirements and material requirements, like the regular personal EVs. It doesn't matter what the cost of it is. It doesn't matter how much money you make. Okay. So especially if you own a business and you can meet all the criteria in what so, then it may be better for you, especially if you make a decent amount of money to buy it through your company and use the 45W credit. And so let's just give an example. So say a $150,000 electric box truck weighs 16,000 pounds. 30% of 150,000 is 45,000, but it gets capped. So they're going to get a $40,000 credit on that $150,000 box truck. So that's pretty rocking, right? And then again, it's going to go on that form 8936. And then the credit is taken the year the vehicle is placed in service. Okay. Leasing companies can also claim it. And you may be able to lease a vehicle and claim it. And so that can possibly be pretty advantageous. So you need to really, if you're going that big, you should have a good accountant that's going to help you with these and hopefully be doing tax planning and model some of these things out and talk about it. But sometimes you got to know to ask the question. They don't even know that you want to do it, right? So what's changing in 2025? Remember, you can throw your questions into the chat anytime you like. So the legislation is going to slash or end most of the clean energy credits, but it is going to extend, these three at least for 3 or 4 more years. Again, unless the Senate changes it and the House is in agreement. That's what we're looking at. And so you can still use everything, at least the way everything is now written now, if you place it in service before 2025. If you don't, you are probably SOL, okay? And so if you're thinking about doing some of these things, you need to get on it. You need to get going if you want to be able to utilize these things. And so if you don't, then it's going to be a higher project cost for homeowners, probably somewhere between that 20 to 40%. As a society, we're going to have slower clean energy adoption, penalize middle income earners, because that's who gets a lot of the benefit of this and who it helps the most. And then most of the benefits are going to get shifted to large entities. I wouldn't be surprised if that extension goes and then some other things get passed to continue to allow commercial, because there's a lot more of even like the fossil fuel and utilities and stuff that are doing more alternative clean energy stuff because it's good for business. If they lobby, they get it back. We just may not get it as individuals. So what can you do right now? Projects got to be installed by the end of the year. You want this? Get it, or buy the car, whatever the case. You need to accelerate your project timelines if you're already going, or when you're talking to people. Like, I would say you need somebody that can promise you to get it done by like October. If they're saying we'll get it done by the end of the year, but we're backed up, like you could be getting sold a bill of goods that's going to screw you over. Or maybe you put something in the contract that says if you don't get it by this point, then you knock the cost down by 25%, and that would compensate me for not getting the tax credit. I don't know that they would write it, but again, I would be looking for something like that. Again, we can't give you legal advice. You need to talk to your attorney, et cetera. But again, don't just be trusting a nod and a handshake there. So, if you can't do something as big as like the total dream thing you want to happen, you can start small, get this part of it and expand later, right? And then EV purchases, I would act faster. I wouldn't just wait until November or December. Inventories could dry up momentarily because everybody's got the same idea there. Then you lose out on that as well, or at least all the cars under. If you're trying to buy a used one under 25, you just won't even be able to find one because everybody just scooped those up that was eligible for that. So when you think about actually doing a project, like solar, wind, geothermal, putting in HVAC, really is, am I going to hire a full contractor, put it out to bid, get a couple bids, and then go with one? Am I going to do it myself? There's not a ton of people that do that anymore. I'm a DIYer. I've installed, a big 30 kilowatt, 100 panel thing on my old house and get ready to do an even bigger one on my farm. And so you absolutely can do it. I'm a financial advisor. My undergrad was history. I just read a lot and I'm pretty handy, and you live and you learn, and you still, will have your local municipalities and building inspectors that, will help you out, even if it's just denying you on your inspection and you got to fix it. But it is absolutely possible. Just don't kill yourself. Getting shocked by high DC is worse than getting shocked by AC. So direct current versus alternating current. So you got to be careful if you're going to go this approach, even though there's a ton of savings possibly. Or a hybrid approach. You can find a contractor that's like, I'm so busy on this. It's like, well, if I got this part and this part and this part done, could you have, could you do this part and that part? I'm not as sure about it. Or, I'll get in I'm going to redo my roof, get in all the railing and racking. I'll mount the panels. But could you just run the wiring and tie it, and I'll mount the inverters and everything. But I want you to wire it all in and hook it to, the actual, like grid tie into your panel. And they might say, heck yeah, that'll take us like 1/3 as much. I could probably squeeze you in on this. Or you might find an electrician that does this and is willing to work with you on the side under those conditions, because all they want to do is the electrical, not any of the hard labor on the roof or the panels, etc. So there are options. There are options here. So lead time and cost planning. So if you really want to hire a full contractor, I mean, you are pushing it right now, because 3 to 6 months, contractors are already out. They're always behind. So you need to find somebody, and that they are confident that they're going to be able to get you done by the end of the year, if not give you some kind of backup. If they're so full, they're not going to give anybody guarantees, because they got other people that'll take that spot regardless. So you need to jump on it if you're just trying to outsource this to someone. Okay. Again, like I had mentioned before on the EVs, if you try to wait, then inventory could go low. If you're trying to do the used one, there may not be those cars under 25K. If there's a ton of demand trying to get in, it can raise the prices by, $3,000 to $10,000, and somewhere above that 7,500 point, it doesn't even help you to get the tax credit. It's like, oh, I got a tax credit, but I just had to pay more because the MSRP went up because of all that demand push. So don't be waiting if you really want to do this. Go out and get one right now, if it makes sense for you in all the other variables, right? And then costs. Again, I would say already you're starting to push to where costs could be going up. I'm interested to see, once the credits go away, if the contractors will give up some of their margins, because it's going to be less affordable for people, because they are just making tons of money, subsidized a lot by the tax credits. And so they're just making tons of money, way more than what used to be, 10 or 15 years ago. All contractors are. It's not just that, not just solar or what. So, but anyways, I'm interested to see if it'll go down some after the credits are not there. So I'm going to give you a little bit of a, kind of a shopping example when you're looking through things. And so, you can look up things. So let's look at a heat pump. And if you're not really familiar with heat pumps are, they can look just like an air conditioner, like that one right there. Okay. Sometimes they look like mini splits, like these, and so basically a heat pump, if you want to oversimplify it, is just like an air conditioner that can run backwards. And so they will use some kind of coolant, like 410A or whatever, that when you change the pressure of it, it makes it hot or cold. Okay. And so when you want to heat your house, well, let's say the cooling, you're used to the cooling. When it's kind of like a refrigerator, it's pumping the cold fluid back into there after it pressurizes it, and then blowing the air through it. And it's not as much blowing cold air into your house as it's extracting the heat. Okay, it's extracting the heat, and then when that coolant gets warmed back up and goes back outside and expands, then it's got big fans that eject the heat out into the environment, and then it pressurizes, puts it back in, and the whole cycle goes on. And all it's doing is sucking heat out of your house and putting it outside, and that's how it cools. So a heat pump actually kind of does the opposite thing. It turns itself backwards basically, and it sucks the ambient heat out of outside. If you go stand next to a heat pump when it's kind of cold outside, you'll feel that the wind is blowing on you is actually colder. So most people are used to the air conditioner when it's blowing out, it's hot air, right? And so you'll feel it's actually colder because it's sucking the cold. Well, it's sucking the heat out of outside and injecting it into the inside. So it's pretty cool, right? So it's just basically an air conditioner that works in reverse. And so you can see this is a pretty big system. This is a 15-ton, 17 seer. That's kind of an efficiency rating. There's all kinds of different things you look up when you're shopping these in terms of how many BTUs you need. You can actually raise the efficiency rating on this by using it as a smaller unit and bumping it up to 18 instead of 17. But this is kind of that big unit that's doing that. And then it pumps it inside to your internal thing that blows it through your central air. And then that's the tubes that the coolant goes through to do that. But you could buy this yourself. So $5,378 is a big system. Probably, I mean, it depends on your house and how it's split up and everything. But I mean, this is probably good enough for, a 2,500 to 4,000 square foot place. I mean, this is serious. This is a serious amount of power in terms of heating and cooling if done well. Okay. And so now again, there may be some extra things you need to buy. If you're DIYing this, you may install this part. If you feel confident you can run the line set, then you could get an HVAC tech to just check your work. And if it's good, to vacuum it and charge it and then test it. And that you get that for a fraction of the cost. You install something big like this through a regular HVAC company, you'd be looking at $15,000 to $20,000, right? So I just want to give you an example of this, and then of course, you put that 30% on there. Now you maybe add an extra $1,500, so you're talking about $7,000 there. Then you're going to get your full credit on there. So maybe for $5,000, you get a $20,000 system. That's pretty rocking. Or you pay the full 20, and at least you get 2,000 off. Right? So there's example one for you, which is just kind of looking at heat pumps. We're going to look at solar. Okay. So, there are lots of companies out there now that you can go and look and shop from and buy from. And some of them are sourcing a lot of the same stuff. Okay. I like this company. They seem to almost cater to people that want to learn like how to do stuff themselves. If you buy from them, they'll even do all the permitting and stuff for you for like $1,000. And I can tell you, of dealing with like 4 different municipalities, permitting can be a pain in the butt and hard. And so it's nice to find something like this. There are lots of other alternatives, but they got lots of videos. You can check it out. There are lots of calculators. You can even ask your AI based on what you're doing. How much are you going to need, and how big do you want to go? What could you really handle in terms of the time? You got a time limitation here, right? And so anyways, I was just looking at this one. This is a pretty decent sized system. It's 12.15 kilowatt, 30 panels. You get everything that you pretty much need for $18,500. Main thing you're missing on this is like the racking, and you're going to need extra wiring. I really like Solar Edge. I mean, I even own some of their stock. They're down like crazy, but they are the coolest, quirkiest company that build really good stuff. I've used a lot of their stuff before. But anyways, this is a pretty good kit, and I'm going to show you some of the math of it later, but you could go anywhere you wanted to. You could say, I just want to do 5 kilowatts. It's going to be this many panels. There are different ways to do it. Like this one, we use power optimizers instead of like micro inverters. So micro inverters would change the DC to AC right at the panel. And then with these systems that use these optimizers and have a centralized inverter, then the DC goes to here, and these kind of optimize so that each panel can be independent, which can help a lot for efficiency. We're not going to get into a whole thing. And then it gets converted to AC after actual inverter that, for most people, probably in their basement or on the side of their house, or, it just depends on what you're doing. Okay. You can also look at, Tesla. You got to use a certified installer. They're still confident that they can get stuff done. I think it's funny, ironic. I just got this email this morning from them. that says, hey, the solar and battery tax credit may be ending. You want to save 30%, then let's get on it now. I think their installer is one of the people that I even looked up in here before, was this Pure Light Power. So in my area, which is Central Ohio, Pure Light, I think, is their certified installer of stuff. So I did kind of put that into here. If you can look for people around you, you can talk to people on Facebook Marketplace, ask your friends if anybody has shopped it out. You can Google it. If you're going to spend this much money, you need to interview almost everybody you can. Okay, and you need to get costs, ideas, timelines, documentation, references, put it all together, and then you need to choose somebody fast as possible if you're going to hire a contractor to get this done. So it's pretty expensive on the Tesla side of things, but they have a beautiful system in terms of aesthetics, in terms of it just working well, in terms of it working with the battery backup, integrating with everything that they make together. If you want to go higher end for like the actual tiles, where it doesn't even look like you have solar on your house, it just looks like expensive like shingles, you can do that as well. So anyways, I wanted to just show you that you can shop these things out and find things and put them together. This gives you like an example of a system cost breakdown. So we're going to use the last one and say, all right, you buy that solar kit for $18,480. You have some miscellaneous parts that you got to buy, some wiring, some rails. You do get somebody to help you install just the manual labor side of it. Say that ends up costing you $2,500 and an extra $4,000 for an electrician. I think you could do this all for less. But again, if you're just not comfortable and you're kind of being your own general contractor, and the person that's putting all the orders and everything together, but you don't really want to do the work, then that's reasonable. Then it costs almost $28,000. You get a tax credit of $8,000, almost $400. So it comes out that it costs about $19,000 some. Let's say you use 3,000 kilowatt hours. Most people don't. The average family uses only about 1,200. But the thing that I say on this is, if you're going to go to solar and alternative energy, wind, whatever you're going to do, you should make everything run off of electric. And the average family in the United States almost uses 19,000 in equivalent kilowatt hours of natural gas. So get rid of natural gas. Get rid of it. I mean, you can have it as a backup. Leave the natural gas there to go to your backup generator if you wanted to have one, right? But get a heat pump. Get an electric heater. Get electric water heater. And then you can turn the sunlight into everything that you use. So that's coming more from, hey, if I did convert everything over, that'd probably be about right. But this system, say for Central Ohio, we'd probably be somewhere between 12 to 16, 18 if you're lucky, depending on placement. You could be at 10 to 12 if you just can't face it well in the right direction. You're in a nicer place that gets a lot more sunlight. It's not too crazy hot all the time. You could be pushing 18 to 20. But anyways, let's say your rate is 13 cents per kilowatt hour when you're paying for it. So if you're going to save that 16,000, you're going to save about $2,100 per year. So it's going to take you about a little over 9 years to get your money back. Okay. You end up getting an electric car and not having to pay gasoline and everything, and it's still within your usage. Or later on, you add some extra panels and it's not near as much extra cost. If you find extra panels to be able to mount and just hook into your existing system for a good bit less, you could accelerate that. I mean, my break even when I did my first one, I'd estimated at about 7 years. And between getting an electric car, switching everything over to electric, I ended up using my excess electricity to mine crypto. It took me a little over 2 years to get my money back. And then you're way more energy independent. Like I said, you put some batteries and a backup generator, you could be off the grid for a very, very long time if stuff went sideways. I'm going to skip the commercial example just because we're running out of time. But again, your incentives are disappearing after 2025, probably, most likely. So you need to get installed by the end of this year. So even if you need to do a smaller project that could be expanded, maybe a phase 1 and phase 2, do that, and then maybe phase 1 is good for 3 some years, and then everything flips over and new legislation and stuff comes back even better, and you can do a phase 2. Plan, act, and document now. Don't make the mistake of just thinking that you can buy or do whatever you want and then claim the credit. And then you get audited, you could be in big trouble, and it could be a lot of money. So that could be a big tax extra bill that you hit, plus all the penalties, interest, etc. Already talked about that. And so check us out as well too. We try to help our clients with lots of good ideas in terms of making good financial decisions, not just investment accounts, even though we do that very well. So you can read our reviews about how we help people with their tax planning and preparation and estate planning, their investment accounts, their retirement planning. We do a lot. And so, beyond the traditional things, we help people with their cash management and liability. And like I said, tax planning, a lot of people don't do that, even if they help you file your taxes. And then if you want to start a business, we help our clients with that, and bookkeeping and payroll, 401ks and benefits. And we're just a different type of company that believe in adopting awesome things. Even if you don't always like technology, we'll help handle that for you so that you get the benefits of it. And then, we really do believe in people before profits. We walk the walk. We're a B Corp. We're trying to continue to invest even when it doesn't seem like it's going to make us a lot of money, to build things, to reduce costs, increase outcomes, make the world a better place, etc. So there's our team for now. So if you do end up talking with us, working with us, meeting with somebody, odds are it's one of them. If there are any questions, I think I hit most of them throughout here. You can also scan that QR code right there to schedule a complimentary appointment if you just want to talk. We're not just an expensive financial advisor like a lot of people think. In the last year, we've launched our freemium version. So yes, it really is free. You can use some of our planning tools. We're trying to roll out some more AI things to help people. Then we have our Freemium Plus, where you still get all the free stuff. But if you just want us to manage a small account or help you open a crypto account or Roth IRA, you can do that for a very reasonable cost, generally 1% or less, just on that one account. So 1% on, say you put $5,000 in there, we're only talking about, $50 a year. Like, it's hardly anything, right? So let us know if we can help. You have questions. We would love to be able to help you. Remember our disclosures again, that we try to make sure that everything's right, but we're not warranting it or anything. So please look up extra things when you're getting ready to implement, and reference your professionals if you have an accountant, advisor, CPA, etc., or come talk to us where we can run the numbers specifically for you. Okay. And look up our disclosures on the website if you want to. We thank you very much for spending time with us. Hope this helped you. Hope this helps everybody get a break, do something that's better for the world, better for your family, makes you safer and more resilient. So when the power goes out, you're still on, etc. So have a great rest of the week. Join us next week. I think we are doing federal employment. So FERS, TSP, there may be some old hangers on there with the CSRS. We'll talk about it all, tell you how you can do well with that, a few tips and tricks, and we'll see you then. Talk to you then. Bye-bye.